In 21 hours, Bitcoin is going to be printing a red candle on the Gaussian channel. This will be the first time in Bitcoin's history we have ever seen this indicator flip bearish on the macro chart. Along with that, the RSI is continuing to new lows. The question of today's video is, are these two indicators suggesting a continuation toward the downside or potentially painting a false image of what the future holds for Bitcoin? Let's go ahead and jump into it. Okay, MegaWhale team, welcome back to the channel, guys. Thank you for tuning into today's video. I hope you're all having a fantastic day coming up to the new year. And of course, Happy New Year to everyone. Tomorrow, of course, is going to be the 1st of January 2023, our first video of the year. We look forward to seeing you then. Let's go ahead and jump into today's video. Today's video, of course, is going to be discussing the two indicators you see on the chart right here, which are, of course, the Gaussian channel, represented by the top image, and of course, the RSI, represented by the bottom indicator. These two indicators are superb macro indicators at predicting momentum, of course, but also the trend direction and overall strength of the trend. Now, before you get into today's video, go ahead and smash the like button, hit the subscribe button, and obviously comment down below if you have any questions. Of course, join our Telegram channel, which will be the second link down below in the pinned comments. You get access to all of our charts, analysis, information, videos, and a whole lot more. Of course, our traditional standard posts will be starting back tomorrow for both the VIP channel and, of course, the Telegram channel here. You do have 24 hours to actually get into the VIP channel. We do have a 20 to 50% off membership sale at the moment. And we do only have a couple spots remaining for that. You'll get access to our VIP channel, which is over here. You can see the channel is paused until tomorrow. Let's go ahead and jump into today's video. So before we get stuck into any of this, we'll go ahead and talk about the broader markets and the market data, and we'll come back and finish up on Bitcoin. So what is happening here for the quarter? Obviously, with less than 24 hours remaining, Bitcoin is looking, well, we're about to see the first ever four consecutive red quarters closes in the history of Bitcoin. This is, of course, going to be representing the longest downtrend we have seen, and of course, the biggest downtrend we have seen, not in terms of percentage, but in terms of monetary displacement, in terms of the amount of money that has been dragged out from the high to where we are currently. This is the longest and most aggressive bear market we have seen yet for Bitcoin. Moving on, volatility sitting around 6.18 should have been dropped, and it has dropped. Holy hell, guys. 1.46. That is crazy. 1.46. Now, the last time we saw 1.46, the last time we saw 1.46 was back in 2017. We haven't seen 1.46 since 2017. That is absurd. We are at historically low volatility periods right now. This is ridiculous. But guys, with this decreasing volatility, with compression, and we'll show you compression in a second, in price action, we do expect a big move to follow. Generally, we see steep, volatile price action, followed by drawn out compression and consolidation, where the price starts having lower highs, higher lows, or vice versa, or even lower lows and lower highs if it's going to be a falling wedge pattern. Okay, with decreasing volume and decreasing volatility, it eventually results in the next move. This is, of course, consolidation. Moving on to volume, we can see liquidations around 45 million for 24-hour period. Again, all of that happening within the prior 12 hours. Within the last 12 hours, we haven't seen too much volatility, and again, not a lot of liquidations. Very, very low right now in the markets. Let's go ahead and take a look at the broader market. So the DXY has fallen again, failing to push above this 1.4 level, getting hammered back towards the downside, 1.378, and it looks like if it doesn't see a reversal here, we are going to be continuing to retest that downward trending resistance again, which could sit around 1.2, potentially even that red line. Zooming out a little bit for the DXY, however, we can see a few things occurring. Obviously, on the daily chart, it's not looking too good. We are definitely in an aggressive downtrend. We can identify the fact that we are in some degree of a consolidation pattern over here, which is a falling wedge structure. Again, these are reversal patterns, so potential reversal is coming for the DXY if we can break out of that resistance. If we go ahead and bring up some moving averages, we can see we are underneath some of the significant moving averages, the smaller moving averages, and the 50 EMA. So the downtrend is very strong for the DXY right now. Of course, with the DXY falling, we can expect asset prices to remain stable, if not go up. But again, we haven't really been seeing too much of that occur, even while the DXY has been falling. And obviously there's a whole variety of different reasons for that. Most come down to the economic situation. Moving on to the Dow Jones, we can see we're still holding out in this neutral territory. Remember, this zone over here is neutral territory, meaning that we have developed this downtrend, we found initial support, and before we make that next move towards the downside, we're going to see if we can retest this area to bounce or find a rejection within this zone and push towards the downside again. Moving on to the S&P 500, exactly the same thing is happening over here. We do need to break above 4,100 to see any sort of continuation up to retest the major 4,300 zone. Above 4,300, we are bullish, okay? Until then, we are in a downtrending formation on the macro chart. We are in a downtrending formation on the smaller time frame. We aren't looking very good. The next target is, of course, 3,600. Moving on to bond yields are pushing towards the upside. Again, this is potentially bullish for the DXY, potentially bearish for the stock and cryptocurrency market. Let's go ahead and jump into Bitcoin on a smaller time frame, and then we'll go ahead and talk about those two indicators on the macro, which are definitely something to be concerned about, at least to some degree, because again, like we said, the longest bear market ever, the most bloody bear market ever, there are things happening on the chart that we haven't seen before. And again, we'll get into it a little bit more, but a lot of these moving averages, a lot of these indicators, are based on moving averages. So it's only natural to start seeing very, very, very bearish signs on indicators, particularly when these indicators are created from moving averages. If you think about this, the price is moving downwards for an extended period of time, and the indicator you're assessing is built based off moving averages. Therefore, the indicator is going to start looking progressively more bearish as the time goes along, particularly as the downtrend extends in length. That necessarily doesn't mean that the downtrend is going to continue forever, but it does suggest the strength of a downtrend is significant in comparison to the prior downtrends or prior price action we have seen in the charts. Very important you understand that, because if you look at the all-time high in 2021, we saw the exact opposite thing occur. We saw an aggressive and very quick uptrend. All of the indicators, again, based on moving averages, very lagging, indicating that uptrend is going to continue parabolically. And this is where you heard of those people talking about $300,000, $150,000 predictions based on indicators. You do not predict bottoms and tops based on indicators. You do not predict reversal points based on indicators. They are purely used to depict the trend strength. You can apply the trend strength to the current structures to infer probable outcomes based on technical analysis. We'll get into that again, but make sure what we talk about today in regards to these two indicators is not the be all and end all. It's just an added piece of information that we're applying to our analysis, which we'll describe again when we get into it. Let's talk about the short-term price action, however. So again, a few things have happened over here. In the last couple of days, we've broken towards really where we said we were going to go. We didn't quite hit 16,200. We came a little shy of that, around 16,300. Our target was, of course, 16,200. But again, since the breakdown over here, we've done a considerable move toward downside since we said so. We have actually come back up and retested our rejection zone right now. So we have lost that resistance zone, pushed towards the downside. We are coming up and retesting this area. So we're going to see a bit of a test over here. I do expect a bit of sideways consolidation here and a bit of lack of volatility over the next few hours. What I expect to see, two things. Number one, for a continuation back towards the downside or a confirmation back towards the downside, where you'll be looking to take shorts again will be a loss of this local low. A loss of this local low will be confirming that move downward. Okay, a loss of that local low at 16,460 will confirm the move towards 16,200. So until that happens, do not expect 16,200. Right now, it looks like we are performing a support resistance slip, testing that lower support range, which we actually lost a few times now as resistance, meaning that this could turn now into resistance. Currently, it is still testing a support, okay? If we fail to hold this, it will now become resistance and again, facilitate that move towards the downside. Right now, if it does see any sort of move towards the upside, we are looking for a break over. I'm gonna go ahead and bring a horizontal ray out. We're looking for a break over this level over here, which is around 16,640, again represented by this local low, again represented by this local high. A break over that level will facilitate a continuation up to this range. And again, guys, we are looking for a break over the POC level as well as this horizontal resistance range to see any sort of swing upward back into this upper rejection range, which is that June to November bottom of 2022. So guys, the short term is obviously looking more towards the downside. We are definitely in a downtrend, and therefore you should be looking to trade with the trend, not against the trend, but always keeping eyes on potential points of reversal. And again, these points of reversal aren't going to magically pop up on your technical indicators. They're telling you where they are on the structural chart. With chart price action, you do a structural analysis, you will see where these points of volume flip and where the price can fly upwards or where the price will potentially reject from these resistance zones. Look at the chart when you're determining the price direction. Let's go ahead and talk about the key aspects of today's video, and that is of course these two indicators here. Looking for an honest, reliable and accurate exchange that you can trust to trade on, go ahead and sign up to Bitget with the link down below and join myself and all of our other VIP members and other members who trade on Bitget daily. There's a whole range of benefits and features you can actually get by trading on Bitget. These include no government regulations, meaning you can sign up from anywhere in the world. There's no KYC, 0% trading fees on spot, massively reduced trading fees on futures, is one of the lowest in the game. And most importantly, access to their protection fund in case the exchange gets hacked. You can actually get reimbursed for your funds, so you can ensure your funds are safe. Now, most importantly, if you do sign up with the link down below, that first link, you'll get access to 2 additional features. These include access to a reward center where you can get up to $4,163 in rewards, and access to the MegaWhale exclusive referral link, bonus discounts. Every other month we do bonus campaigns. We get up to 10% off your trading fees, or even you get a percentage of your trading fees refunded to your account as USDT. Essentially, you get paid to be on the exchange. That's enough, guys. We'll get back into the video. We've talked a little about the Gaussian channel in a prior video. I'm going to go over it again today. And we've definitely talked a lot about the RSI. You know, for the history of this channel, we talk about the RSI every day. So let's start with the RSI, because RSI is pretty significant. So what we're seeing over here is we're seeing the monthly RSI drop down below the prior 2 bear market bottoms. Okay, so we've got bear market top, bull market tops. Okay, we've got bear market bottoms. It's dropping below the prior 2 bear market bottoms. And there's a few reasons to this, and I'm going to go ahead and explain firstly what the RSI is, and then we'll talk about that. So the RSI essentially describes a few things: momentum, velocity, and speed of price action. Okay, that is what it shows you. It's obviously displayed on a histogram. Okay, from your scale on the right hand side, we're currently sitting at around 40 on the histogram. And it does match price action to some degree. There is some correlation towards the structures on RSI and what you see in the price action, but we do have periods where we have discrepancies between momentum and what the price action is doing, and that is called a divergence. So generally the RSI does predict our momentum, and it tells us shifts in momentum more importantly. And when we have shifts in momentum, whether it be positive or negative, the price is more likely to move in that direction as price follows momentum, as momentum indicates velocity, all right, and obviously volatility, and volatility determines volume. So all of those things are kind of interconnected, and that is why the RSI is such a powerful tool, because when you can see or determine or indicate those points where the velocity, momentum, and speed has actually shifted, you can predict surges in volume, and therefore you can predict reversal points, bounce points, rejection points, etc., etc. So what we're seeing here is a loss of the prior 2 bear market lows. So in essence, this isn't too alarming, because the RSI isn't used in a traditional sense as you would on a price action chart. If you're looking at a price action chart and you saw a structure like this, where we had a double bottom over here, okay, that we lost and rejected, that would be alarming. But in the case of the RSI, since it's not really mapping out price action, it's more mapping out velocity, momentum, and speed of price action, it's not actually as alarming as people would potentially lead you to believe. I see a lot of videos on YouTube about this, and half of it's all a load of crap if you ask me. It's not as negative as people would lead you to believe. Now, if we go ahead and take a look at historical volatility, and we know now that momentum, volatility, and velocity are the three components of the RSI. And we know that the RSI volatility, or the volatility in general, the price action, hasn't been this low since 2017. And we know that the bear market has been longer this instance than prior bear markets. And we know the volume is very, very low. And we know the amount of money is put on the market is very, very large. We can assume, and we do have, I would say, a reasonable amount of data to confirm the fact that this has occurred. And again, it's not some anomaly that has occurred on the charts. It's got actual evidence to why it's occurred. It's got a reason to why it is occurring. So what this does suggest, it suggests that we are in an extended downtrend. We are in an aggressive downtrend. We are rapidly losing velocity. We are rapidly losing momentum. And more importantly, volatility and volume in the price action has been represented by the price action. If we go to the price action chart, we can see we had like a 4 to 5 month period, guys, between June and November, where the price literally just went sideways along that $19,000 range. Within that period, we had ridiculously reduced volume. We had dropping volatility. We had dropping momentum. And ever since then, it has been on the downfall since that FTX crash. So again, this isn't something I'm sitting here too concerned about, because again, RSI doesn't tell us what the price is doing. The RSI tells us what the momentum, velocity, and speed of the price action is, and therefore can predict shifts. What I'd be looking for in the RSI, more importantly, is not where it's going, it's where those points are on the RSI that could indicate potential shifts in momentum. So again, going back to a chart like the weekly chart, we're looking for something like this. We're looking for a breakout of this downward trending resistance on the weekly to indicate a potential shift towards the upside on in the momentum for Bitcoin, and that could bring volatility, it could bring volume, which could potentially push the price action higher to break out some of those structural resistance we have developed on the chart, such as a smaller time frame falling wedge extending from June to current. So that is why the RSI is important. Now, obviously, it's not a good thing to start to see the RSI reach new lows. As we know already, the RSI can continue to fall when, again, it can continue to fall for quite some time. And again, it doesn't matter if it does, because it doesn't determine the price action. Very important to understand that. What it does determine, once more, is the velocity, speed, and volume of the price action, and those things can determine where the price goes. So keep in mind that the people telling you, RSI going down, it's all doom and gloom. It's not particularly the case. There's a reason why we're seeing it going to new lows. There's a reason why we're seeing where it is, and there's a reason to why we shouldn't be too concerned about that. Now, going back to the Gaussian channel, like I said before, it's only normal to see indicators that are developed on moving averages, particularly larger time frame moving averages, to start to flip bearish if we've had extended, drawn out, and quite aggressive bear markets. Okay, if a moving average is determined, the price of the moving average is determined based on historical price action. Okay, and if we're historically in an uptrend, the moving average is going to be very, very positive. If we're historically between an uptrend and a downtrend, it's going to be quite neutral. And if historically over the last few periods it's in a downtrend, it's going to be more aggressive. Now, as time goes along, as the bear market continues down, the amount of periods that the moving averages, which constitute the Gaussian channel, take into consideration, are more and more pointing towards the downside. As that happens, the indicator flips more and more bearish. At some point, it's going to flip bearish as opposed to neutral, as opposed to bullish. And that is what is happening here. We're starting to see the Gaussian channel actually go, that midline, the price action, break below the midline and Gaussian channel. This is indicating that the downtrend has been drawn out, has been quite long, and again is quite aggressive. More aggressive in comparison to the prior bear markets. What does this tell us in regards to price action? So to understand what this is telling us, we need to go ahead and understand what the Gaussian channel does, what it is, and how it can be used to determine macro trend direction before we go ahead and assume any from the chart. The best way to do that is going down to a weekly chart or a smaller time frame where we can see it in a little bit more of a motion. So generally what the Gaussian channel does, or what it predicts, like I said, it predicts macro trend, particularly shifts in trend, okay, and the trend strength as a whole. But again, shifts in trend is the key word. At what point does the trend actually flip from up to down and vice versa? And those are indicated generally by the dips through and breaks upward from the Gaussian channel. For example, we have an uptrend over here. We pushed into the Gaussian channel. This is a first test of weakness. we broke into the Gaussian channel, indicating the uptrend is over. Okay, the downtrend initiates once we break through the bottom and the midline. This is the downtrend initiation. Okay, so the uptrend is officially over once we break through. We're in this neutral territory, and then a downtrend initiates, so we break through the middle and the bottom, and that downtrend continues until a price action pushes through the Gaussian channel to wherever it finds support. On the upside, again, downtrend weakening. We broke in, downtrend over, and then uptrend begins. We push upwards. Okay, exactly the same thing in this bull market. We see exactly the same thing. Okay, a retest of the Gaussian channel indicating weakening in the trend, a break. The uptrend is over, okay, the downtrend is starting, okay, and then obviously we're pushing into those depths over here, and then we repeat and rinse. And you can see exactly the same thing happen every single time, guys. We're breaking from the downside in, we push through, the downtrend will end, the uptrend will continue until again that midline is lost and we push back below. So generally every time we lose that midline, we push back below. We see it one more time. We push up, the uptrend commences, we push up, weakness in the trend, we break that downtrend, obviously breaking through our midline, and then the price pushes through the Gaussian channel until it finds support, and obviously then continues into a new trend. The question is now, will we see a similar thing occur as we just described on the monthly chart? Because if so, breaking the midline would indicate that the price is going to push through the bottom line of the Gaussian channel, which could potentially take the Bitcoin price to around 10,500. If we go vertically down, it's around 9,000. But again, a minimum of around, a lowest point of around 9,000 as of current price. You know, if we extend this to like August, it could be 12 or 13,000. What it does suggest essentially, guys, which is hard to do price predictions based on it, it suggests more downtrend is coming. So keep your eyes on these charts. These charts are very, very interesting charts. Obviously, there's a lot you can talk about on these charts, as I just talked about to you, but it's very important. The key takeaway from this video is, I wish I did a video like this at the top. As we approach bottoms and tops, as uptrends go longer and longer, as downtrends get longer and longer, it is only natural to start seeing indicators suggest extreme bearishness and extreme bullishness on the flip side. That is because indicators are based on moving averages. If a trend is extended or incredibly long, the amount of data it's taking in to consider what the indicators are built on are more time periods where the price action has been a downtrend, and therefore the indicator is going to be more aggressively bearish. If you're taking your analysis and saying, okay, we're in a bearish MACD cross, we're going down, you're doing it the wrong way, okay? Lagging indicators do not predict reversal points. They tell you the trend's strength. You have to look at the other data, such as the structural analysis we do, the zones. This is why every single video, guys, we always talk about our support resistance levels. We always talk about our volume ranges. We always talk about diagonals. We always talk about potential reversal points, because there's more to technical analysis when it comes to predicting actual price action than looking at technical indicators. Technical indicators are fantastic accessory tools to be used in conjunction with structural analysis, but again, structural analysis alone is generally enough when you're looking at macro price action. I'm gonna leave the video, guys. If you have any questions, leave them down below, and we'll see you guys tomorrow. Happy New Year, everyone. Stay safe. I'll see you then. Cheers.